Sorry for the delay. We are now live on LinkedIn. We are okay. Jeremy's trying to get in, so we got a little bit of technical difficulties. Matt, you want to take over the mic and I'll try to get him in here?
Yeah, sure. Absolutely. I'm really, we talk a lot about capital raising for real estate deals on this show here. And I'm really excited because I started as a stock market person before I even thought about getting into real estate. I used to have a little portfolio. I think it was like $1,000 that I used to have an E-Trade account, and I'd day trade stocks and stuff like that. And I thought that I was going to be, I thought I was going to grow that $1,000 into $5 million. And I educated myself a lot on, studying Warren Buffett and Benjamin Graham. And I really gained a big interest on it. I thought it was going to be some sort of like cigar chomping Gordon Gekko type, with a huge office on Wall Street and that sort of thing. These are, normal childhood fantasies. And then, long story short, I was managing my own portfolio, and I really kind of just, it required a lot of active management, a lot of research, and a lot of things I didn't have control over. So I just made a decision that, stocks really weren't my cup of tea, especially after I bought my first 4-family property. And, that was like when I got the major aha moment that I was like, that was too stupid to deal with stocks. So that's where I'm really excited to have Jerremy on and learn about what he's been up to and his secrets.
Yeah, seriously. I'm going to send him the link in Slack too. But he's got the link now. He should be coming on in a minute. I can read over a little bit of his bio for the audience. So Jeremy's passion lies in financial liberation. He's been on this impactful journey since 2010. And, as a professional button presser, he knows that sometimes we need to make bold moves to create massive transformations. With his guidance, countless clients have experienced radical life changes in their finances, their careers, and their relationships. And I've been following him a lot since I joined a mastermind with him, and he's just absolutely incredible. He's got this like perfect work-life balance thing figured out that I think a lot of us struggle with. We work so hard, and sometimes we kind of neglect our families. But every time I check in on what he's doing, he's just got it. It just seems like he's got it so dialed in. He's got this real rich background in trading, and all right, he's popping on now. I'm going to bring him in live since I'm botching his bio anyway. All right, here we go. My man. What is up?
What's up, legends?
How are you?
I'm amazing, man. How are you doing?
Oh, pretty good. I'm loving that shirt.
Thank you.
Yeah, it almost looks like a Grateful Dead.
Just a big Marcadian projection on my shirt.
Cool.
Yeah.
So I don't know if you caught Matt in the beginning. He was talking about some stocks while I was sending you the link. So I was like, I'm not even going to go there with Jerremy. He's on another level.
Thank you. It's just my specialty. That's all. Just like you guys have yours, that's mine.
Yeah. Why don't you tell us a little bit about, how you got started and, specifically how you like segued onto the real estate side and like what your allotment is as far as like real estate versus all these other alternative investments that you're doing.
Sure, man. So essentially how I got started in stocks, relatively easy, basic story. 1994, I was watching Forrest Gump with my dad. I was super poor. Forrest Gump mentioned that him and Lieutenant Dan invested into a fruit company. No longer had to worry about money. I was like, what? That could happen? That's crazy. So that was a paradigm shift. Everything changed for me. So I asked my dad, what's investing? What's the fruit company? He tells me about Apple, obviously. And so I begged him to buy some shares, and we buy some shares. And that's how it started, man. Like really, just hearing that, and that the money that we invested did grow quite substantially. And I've been hooked ever since. And I went to college for finance. I thought they would teach me the stock market. Guess what? They didn't. So I switched from finance to business management. Went down the business management route, self-taught. I started at the age of 19 and just read every book, went to every class, went to every seminar, went to every webinar, spent all the money to learn everything I could about the stock market. And I've been doing that for the last 15 years. And there's been tremendous downs and life-changing, world-altering ups and everything in between. So I learned a lot about it. And the real estate thing happened for me essentially just slightly accidental. I think, here's what's interesting, Mark. Most people don't understand the stock market for two reasons. They weren't taught, and what they were taught is incorrect. So people are taught it's gambling, it's risky, you can't control it, you don't know anything about it, you don't know, like you're throwing your money away and you have no idea what you're doing with it. And that's just an incorrect fallacy. It's just wrong. But everyone's been invested in real estate because we've always needed a place to live for humanity's time. So your dad, everyone's parents have understood real estate to a degree because they've had to. But the stock market's only been around for 100 years, 120 years. So it's brand new on the whole grand scheme of humanity. So people are learning about it as we speak. So I think as people can learn more and more about it, it just makes more sense to educate people. And that's kind of what happened on my end. Was I just studied, I educated, I made some money, I took that money, I did buy real estate, and I did the whole house hacking 2-year thing. Live in a house for 2 years, fix it up, sell it, move into the next one. And I've been doing that for a while. And so to answer your question about asset allocation, I have about $4 million into real estate, which isn't very much in my opinion. Now saying that, it's about 6% of my overall net worth is in real estate. And I like it that way because everything you can do in real estate, you can do in stocks. Everything. Except stocks are faster, easier, quicker, more efficient, more effective. You can do it anywhere in the world, no phone calls. All you need is internet. It's just you versus you versus you. And I like that. And it's in all aspects, everything you can do in real estate, you can do in the stock market, except better and faster.
Wow. Yeah, I never thought of it that way. I remember reading an article early on, because I bought my wife an iPod for her graduation when she graduated college, and it was like Generation 1 iPod. And then an article came out that said, if you would have bought Apple stock instead of buying that Generation 1 iPod, this is how much it would be worth. And my jaw like hit the floor. I was like, what am I doing buying these stupid consumer devices and not investing? And that's the same time that I started with some stocks, but I quickly transitioned to real estate. So I'm 100% real estate, really, with no allocation in stocks anymore, just because I never felt like I had the time to really figure it out the way that it needed to be figured out.
Yeah, 100%. And it's fair, right? It's fair. One of my favorite quotes is Mark Cuban says, diversification for people who don't study. Mm-hmm. So you studied and you became a specialist in one area, and that's okay. And you've made wealth in that one area. My one area just happened to be the stock market. But at some level, really, one of the things I do is I go on stages at really large real estate conferences and talk to people about stocks and let them know that, hey, if you like rent, if you like appreciation, if you like controlling your downside and making cash flow monthly, you can do that with stocks with less money and a higher return, with less work, with no phone calls, with no tenants, with no contractors, with no approvals. And if you carve out an hour or two a week for 2 years, you'll learn more than 99% of anyone that you know.
Yeah. So Jerremy, I had a question for you. What would you say if you had a investor that is your spirit animal, right? Mine is Warren Buffett. What would you say it is? Who's inspired you the most in terms of their strategy and their ethic as an investor?
I love Warren Buffett. I have read every book, article, video, all the things, but I'm going to go one step earlier than our boy WB, and that is Charles Dow. So Charles Dow of the Dow Jones, like he is the godfather of technical analysis. This man studied for 25, 30 years, the original efficient market hypothesis. And there's so many aspects that he went into, and he created everything that I live in and everything that I touch, breathe, and see every day. It's all from him. And he did extremely well, and his name continually lives on, and it will forever, right, in the Dow Jones. His partner, Edward Jones, right, when they formed small little publication, the Wall Street Journal, it allowed people to understand about wealth at a big scale, because wealth is one thing, financial literacy is something else. And Warren Buffett's I mean, amazing. I love WB. He's incredible, incredible. But he's a great businessman. He's actually less of an investor and more of a very smart businessman. A man who understands private equity, a man who understands public equity, a man who understands how to own stock and loan against it, go buy a company, increase the value of the company, own the shares of those company, and your value increases, and then you can sell those shares tax-free because it was a loan. So he understands the high-level pieces of financial literacy, and him and Charlie Munger are incredible. But if I had to answer your question directly, it would either be Charles Dow or Elon Musk.
Oh, Elon Musk. Why Elon?
Because he built and he created. I think we're created to create. And so his wealth journey has been very unique, but also very simple to replicate. Take knowledge, build something that helps people, eventually scale it and then sell it. Take that money and then funnel it into your mission, your purpose, your dreams, your desires, and just become a great human. Become someone that can impact the world. And that's really all he's done. I mean, love him or hate him, I'm a Elon fan, obviously, but I like his efficacy, which is essentially I want to do something big, and I'm taking my money, my wealth, and my knowledge, expanding that, using the stock market to my advantage, and then building my purpose on top of it.
So on the subject of, the big elephant in the room whenever you mention Elon's name now is Twitter. What the hell do you think is going on with Twitter right now? And do you think possibly there's some of this stuff that's sort of intentional?
I think it's mostly intentional.
Mm-hmm.
I mean, Elon Musk has thought through the Twitter game for 5 years ahead of time. So here he knows what's coming. It's unfortunate that they're being censored in Europe because of the government. I think that's extremely, extremely interesting that he's allowing that. But I think he's doing it in a way that he is doing his best to allow not freedom of speech, but freedom of opinion. I think that's a little bit of a difference for him personally, because Twitter is more of an opinionated article of just individuals. It's less like really beautiful speech and rhetoric, like a Jordan Peterson, right, type of platform. But I think he is going to continually allow his friends and his people and his network to get on there, and he will help promote the right people. That's my personal belief. I could be wrong, but he's going to do his best to allow the people in his viewpoint, and again, his freedom of opinion, he will put people in place that he is opinionatedly following and allow them more freedom of speech and more access.
What about your opinion on how it's going about in terms of the shakeup, if that's intentional? Because it seems like, all right, there's this guy that's really, really smart that's going to a company that's creating a lot of chaos within the company, and you have people that are, jumping ship and that type of thing from a sort of like a strategic governance perspective on Twitter. Walking into the Twitter headquarters with a sink in his hands. Let that, I'm here, I'm CEO, let that sink in. Because I'm trying to understand the long-term strategy here in terms of am I trying to lean this company out and really rebuild it completely because I need to shatter the culture and rebuild something brand new? Or is it something different?
I think it's the first one, man. I really do. I think it is. He's just an efficiency machine, right? And if you go to his realization of SpaceX, he literally wanted to reuse the same rocket ship. No one had ever thought that before. So he's just going at it from an efficiency standpoint. Most businesses, I think, are overstaffed. And with technology the way it is right now, I mean, let's look at this podcast. Like the three of us, if we met 30 minutes every week for the next 6 years, we could influence hundreds of thousands of people with our information. Guys, I'm doing a hotspot with my cell phone, right? Like from out in the middle of nowhere, Utah. Like you don't need that much really to create. And with software, it's the number one marginable product in the world. Number two is cologne and perfume. So Twitter is a software company, and you don't need that many people at a software company. You just need the right people with the right work ethic, in my opinion.
Yeah, absolutely.
Yeah, man.
I'm back. Sorry, guys. I got booted out for a minute.
No worries, brother.
Did you see me disappear?
Yeah.
Yeah,
All
I
good.
saw your
Okay.
I saw your face stuck like this.
Very cool. So what I miss?
Oh, just
Some Elon
Twitter.
talk.
Yeah, Twitter
Yeah.
drama. Yeah, the favorite person to talk about is Elon. So
Yeah, he'll be the
Yeah.
world's first trillionaire without question.
Oh yeah.
Yep.
So I got to ask
Jeremy,
you, Mark.
Yeah, go ahead.
I got to ask you, Mark. What's your asset allocation like?
I just do real estate.
Okay.
But is it all single family, multifamily, short-term rentals?
They're all long-term leases. I would underwrite always based on a long-term lease. If I could do a short-term on top of it to get a little extra cash flow, I would. And now I'm getting into the larger multifamily space. But I started out as just, like a mom and pop buying up onesie twosies and then building the portfolio and getting into some bigger assets over time.
It's a great way to do it, man. Tried and true.
Mm-hmm.
Yeah, Mark, I was really in the 100% real estate asset allocation camp until when I started doing larger deals, and I'm still the the quote unquote KP on our larger deals, so I'm the one that has to have the balance sheet. And what banks look at is they want to see cash equivalents on your personal financial statement, regardless of how well that real estate asset performs, or if you're buying it for a steal. So I've intentionally, and this is the reason why I've always kind of been indoctrinated with the mantra of use other people's money always, so that I can build the cash position in my portfolio, and I invest that cash into mostly index funds, because it's not going to be something I'm actively managing, to grow my balance sheet so that I can stay as a KP on real estate deals. So that one deal I just sold, where I cleared a $200,000 check on that deal, and people thought I was crazy for not doing a 1031 exchange into something. I was like, I don't want to feel like I have a gun against my head to buy a real estate deal. And then two, I'm like, I don't know, man, this market is really, really weird. Capital markets are being very, very influenced by high interest rates, not only on the debt that you get on these properties, but there was probably about 3 years ago, I was able to raise significant amounts of capital from our private investors and offering them a 6%, 7% flat rate of return and being fully subscribed to those deals. And now people are getting 5%, on a FDIC insured money market account. So that's kind of like the tail wagging the dog on there. So I'm trying to position myself in my balance sheet to be in more of a cash position. And if I come across a deal where I need to free up some cash, I have a securities-based line of credit that I can use to tap into to fund those deals and let that money work for me on the sidelines. What are your thoughts on that?
Yeah, that's smart. It's definitely what I'm working towards too. I want to be in the KP position. I've always done my own deals, so I understand how the bank looks at me from a cash flow perspective. So I do carry cash just for that reason, but I try to cycle it. Get it back in my bank account as quick as possible.
So Jeremy, are you a KP or a key person on any real estate deals where you just are the guarantor?
See, I thought KP sought for kingpin. I am an LP and a GP in a few different partnerships. I don't have a KP position that I'm aware of, other than just regular ownership. One of the things that I'm actually planning on doing, and this is only because it's against the grain, I just like contrarian thoughts. It's just my favorite thing. I dig it. Over the next 2 years, I'm going to start paying off all of my properties in cash. I'm going to own them outright. I'm not going to have any debt on them. Not because I'm afraid of debt. I actually love debt. That's awesome. But kind of like you said, Matt, I want to be in a position where I own these outright. They are now assets under my books, cash or cash equivalents with stocks. I can take those, collateralize them if I want to, and then go buy something bigger and more unique from a either a cash flow perspective. Because I can tell you boys this, my next real estate focus for the next 5 years, RV parks. Hands down, I'm done with everything else. They are cash flow machines. They are just like apartment complexes, minus everything you don't like about apartment complexes. They are just like hotels, subtracted all the things you don't like about hotels. Amazing, amazing assets. And I'm either going to build them or rehab them. Because I've been doing RVs for the last 2 months full time, and it's wild, dude. It is crazy cool what's out there.
Yeah, there's some states with some insane tax benefits, right? If you have an RV and you make that your primary state, you can just rent one of those slots and then get crazy tax benefits.
It's wild. Wild. Yeah. So anyway, there you guys go.
And all you need is with some concrete and a little waste station or something.
Maybe concrete.
Right.
I've seen a lot of just grass pads. You need some
Really?
electrical, some water, and a sewage. You're good.
Mm-hmm.
So, Jeremy, in terms of this concept of an RV park, because I actually have a friend who's got an RV park and is like, this is one of the best investments I've ever made, because they seriously are cash cows. Do you have a vision in your mind in terms of like a product that you'd like to recreate or brand in terms of like a national lifestyle travel brand that would be dovetailed with that, or is it just like buy someplace? Like, what's your vision behind that? I want to hear about it.
Thanks, Matt. Dude, that's a great question. I haven't been asked that yet. I want to go KOA style, little higher end type of RV parks. So 90%, not all of them, but 90% of RV enthusiasts and travelers have discretionary income. They figured out their wealth game to an extent, and they're not some of the people that go, I'll travel one day with my family. They're like, no, dude, I'm doing it right now. So they figured out the money game. And I have seen, without exaggeration, hundreds of $1 million plus RVs that have pulled into an $80 a night place. I talk to the people and they don't really like it. It's a little sketchy. It's not that pretty. The bathroom's a little right? You got to pay $8 to wash your clothes. So I want a little higher end where the bathrooms are super nice. They're walled off. You can't see in the cracks because nobody likes to poop with someone watching you. It's just weird. but, so just a little higher end feel. The washer dryers are free. The internet's good if you want to use it. And there's a place, because most people travel with their family. So there's a camp or some type of school, let's call it, for kids where the parents can go away for the day or two or a night or two or an afternoon, and their kids can be watched over, taken care of. And so just need a little higher end that people really are going to not mind paying $125 a night for just higher end amenities and just really, really clean park. And so that's going to be kind of my focus, is just a slightly higher end product. Let's think Marriott of the hotel world.
Yeah. That's sweet. Yeah. Cause there's a couple of concepts that I've really, really liked a lot. Like there's this one concept called, it's not an RV park, but something that if I was going to reposition RV park for, it's called Loge, Loge. And they have a property that's in Washington State. And it was like very high end glamping, but not like luxurious, but just like a very, very curated experience where, like you just said, and they are, and they crush it in terms of the experience. So yeah, I'm definitely intrigued by that, because Mark and I have owned enough multifamily where we would just dream of just having responsibilities of an RV park owner.
Yeah, 100%. And again, guys, I like multifamily, but here's the truth for me: the book Think and Grow Rich. Most people don't think, dude. Most men have a very, very hard time being totally by themselves, sober, out in nature, with no family, no friends around, just them, no technology, just them with a pen and paper for hours, not minutes, like 6-7 hours during the weekday, Monday, Tuesday, Wednesday, Thursday, just walking around thinking. And the reason I'm bringing it up, everyone does multifamily, right? Everyone's doing that. I don't like to do what everyone else does. I just feel like I don't know, man. Like I want to do creative things. I feel like you get paid for the vision that other people don't have. So create things and just think about what is going to be big 10 years from now, 5 years from now, if there is a housing crash, which I don't think is going to happen, personally. But if there's a massive housing crash, people are going to want to move somewhere. And yes, they might probably move into apartments. But what if they downsize? What if they go even smaller? Because now with Starlink, they can work from home. I've proven that, right? I've generated revenue, customers from an RV. It's nuts. So it's like you can do that. And once people start proving that model more and more, maybe they start moving to RV parks so that they're mobile, they're flexible, they can live for 2-3 weeks at a time. Storage units, right? Same thing as like, I think that they were overplayed for a while and now they're kind of getting back in favor. And there's all kinds of real estate plays. But when everyone's zigging, I'm trying to zag. And I think that if we just sit down and think for a little bit sometimes, I feel like it's a good way to approach it.
What locations are you looking for your parks?
Right now, Tennessee, Nevada, Oklahoma, South Dakota, North Dakota. We'll see about Wyoming and Montana. I'll kind of see how they play out. And then maybe some parts of Georgia.
What's the strategy for like positioning them? Like, what are you looking for to say, okay, this is going to be a good location that's going to attract people that are going to want to come to my park? Do you need to be near some like natural attractions, or like what's your strategy there?
Precisely. So strategy is going to be get some SEO behind my RV park for areas in the vicinity that are cool and slightly unknown about. Example, there's a place in Tennessee called Cookeville, and it's pretty under the radar. They have a waterfall that's a very, very nice hike. It's called the Cookeville Falls. Cummings Falls. And there's not many RV parks near there. By many, I mean one. There's one. And it's out there. It's kind of out in the middle of nowhere. Land is like 10,000 an acre, maybe 20. It's not bad. So I go through an RV park and I SAO that RV park for Cummings Falls, waterfalls, hikes near me, waterfalls near me, things to do near me, and build out some cool festivals, a nice volleyball court, a sandbag tournament once a month, whatever. Some things there that are just kind of unique and slightly fun. And that's really it, man, is find some slightly off the beaten path, not a Mount Rushmore or a Yellowstone, but Helen, Georgia, right? Some slightly off the less known, but still cool and nice, popular spots. Yep.
Yeah, we've got a ton in New York State and in Pennsylvania. It's kind of what I grew up with just these little spots that unless somebody tells you about it, you really can't find it.
Heck yeah, brother. Yes. Yes, very cool.
So, Jerremy, back to the asset allocation question. I mean, how do you asset allocate in terms of your actual stock portfolio? Does that sort of stay static, or do you, or is it just going to be sort of company or position dependent on, just because, this, like asset allocating to a certain industry and not being so baked into that you won't make an investment in a, early great company?
That's a very good question. So net worth position, I'd say 1% to 2%, 1% probably my net worth is in physical gold and metals.
Mm-hmm.
I probably have 5 to 10% in like DC private equity deals. Maybe they work, maybe they don't, but I just threw some bite size added to C. And I would say from a stock market perspective, I accidentally became very, very liquid in cryptocurrencies because, again, I zig when other people zag. I bought a lot of Bitcoin in 2015, a lot of Ethereum in 2015, got lucky. It happens. But I also bought a lot of stocks too. So I had stocks. I had Tesla, I had Square, Shopify, Apple, Google, right? 2015, whatever. So 2017 became very good for me. That's when I hit my big numbers. And that's when I was like, all right, I don't have to worry about money ever again. So now I can go do whatever I want. I can say yes to everything. My stock allocation / let's just call it liquid market allocation, about 70% of my net worth is in liquid markets. And from there, 25% of that 70% is in long-term. I really don't touch it very often. Big picture companies, I believe in the product. I become an owner, not just a consumer. Back to Mark's iPad example. right? Owning some Apple, owning some Shopify, Google, Amazon, the large companies, Johnson & Johnson, Costco, Walmart, nothing special, brainless, right? Own those. And I'm sure you know this, Matt, but with your index stocks, your index funds, you can also rent those out and get monthly rental income doing covered calls. So I do sell calls against my long-term positions as well. I'll get into collar strategies where I protect my downside so I cannot lose at all on those positions. And very frequently, I will get into trades where I make 30% return on that investment or 5%. So I'm either going to make a 5% or a 30% return. And I'll just kind of coast and let them do whatever they're going to do. If they sell for 30%, I'll take that money and I'll go buy another great company, Microsoft, NVIDIA, right? Another large, obvious company. That's 30%. Then I have probably 45% of the 70% in swing trade account. So swing trade account, TD Ameritrade, also known as Thinkorswim, more advantageous for flexibility and for speed. These are trades that I get into where I'm in days to weeks. These are patterns. This is active trading. The way I view it, if I can capture a $3 move on 1,000 shares 200 times a year, that's 600 grand of cash flow. Now, most of my active income does come from swing trading and kind of like the core positions I'm in for a few weeks or a few months. Wow, Tesla looks really good to buy at 200. Let me buy it at 200 and sell it at 290, right? With a couple million. Like that's really push the envelope, let it ride for a few months, but I'm definitely going to get out and I will pay short-term capital gains on that. And I'll say it in air quotes because I also own a few companies that are losing money. So, whatever. So you have that. And then the rest of it is, like you mentioned earlier, Matt, liquid for day trading. And I day trade. And I use that money to funnel into businesses, to pay for my monthly stuff, to offset losses, to do whatever this is. And I use this money, the income from this account, to funnel into my swing trades, to funnel into my investments, to funnel into Bitcoin long-term purchases, Ethereum long-term purchases, IBC, life insurance banking, infinite banking concept, whole life policies, just random things where I'm just exploring. And the day trading account, I don't make as much money as I make in my swing trading and investing, but I tell people that that's like kind of my account where I get paid to be in front of the markets. And same thing. My goal is make $3 a day, 200, 250 days a year on, 1,000, 2,000, 3,000 shares. And it can add up. It can add up pretty quickly.
Yeah. So I guess my question was like, so it sounds like, most of the companies you named off there were tech companies. So are you tech heavy in your long positions?
Yeah. I'm tech heavy, software heavy on my long-term positions. They are always companies that I use and operate with, but I do have Walmart. I do have Costco. I definitely have traded Johnson & Johnson. I've traded some of the bigger pharmaceuticals, Eli Lilly, Bristol Myers. I've traded a few energies from time to time. But a lot of tech, and that's because software has the best margins. And they can make the most money if they do it correctly. And yes, you can have some volatility for sure. So March of 2021, lost like 8% in a month. Overall net worth, pulled the plug on 97% of my tech holdings. I was like, something's happening. I don't know what it is. I need to be stupid and let me go figure it out. And we all know, 2021, 2022, there's a lot of crashings that happened. And I did. I lost money for a period of time and had to kind of fight back with it. I lost a little bit of money during the bank collapses recently that no one talked about, ironically enough. 3 of the largest banks in the U.S., regional banks, just went under. And everyone's like, goodbye. That was weird. But I lost about $500,000 in those. And so I do, man. But most of our life, I think, is tech. Not all of it, but I have some investments in AWK, American Water Systems, but small. It's nothing crazy. But the thing is, man, with stocks, what I love about it is if I want to get out of something, I'm out. Right? I click a button and I'm out within seconds. You could do a $10 million transaction and you don't even show up on the ticket order. Like you are like Mark, I can sell $10 million worth of stocks in a quarter of a second and no one even knows I was there. it's amazing. It's incredible.
Yeah. So, Jeremy, now, Mark, just one last question before I stop monopolizing here.
No, you're good.
Okay. So this is something psychologically that I have a struggle with. One of the reasons I hate and love real estate is that it's not liquid, right? The reason why I hate it's illiquid is because I can't buy it when I want it, right? It's like the life cycle of finding a deal that pencils out and that sort of thing could take, 3, 6, 12 months or even 18 months. But the reason why I like it is because it is a liquid. So I have to think, 2 or 3 or 5 times to think like, okay, is my return on equity position falling? Has it been down for a long time where I either need to refinance or sell this asset? My problem with stocks, and this is, I made a lot of mistakes early on, is like, I bought and started accumulating Apple during the Steve Jobs, stock options backdating scandal, that sort of thing, when Apple was $50 a share before all of its splits and that sort of thing. And I kept accumulating, and then it went up so much that I basically just ended up getting out of that position because it would go up quite a bit, and then I'd take money off the table. And before I knew it, I didn't have any Apple stock anymore. Same thing with like JP Morgan Chase and Bank of America when I was buying those, buying into those positions during the great financial crisis. And now, I trimmed those positions way down, and looking back, and I was like, damn, I would have had, $2 to $3 million liquid right now if I just would have stuck with those and not done that. So what's your advice for investors on kind of maintaining that sort of mentality on, when things go up and also when to sell?
Steve Barron once told me in a room of people that he became a billionaire by selling too early, too often.
Mm-hmm.
Because what he will eventually do, Matt, is he will rebuy. Right? He's not afraid to repurchase. Like, it's okay to sell something if you can rebuy it lower.
Mm-hmm.
Or if let's say you make $100,000 on Apple, well, take 90 and put it back in Apple and leave it alone forever. The answer is, just like with real estate, have your plan before you do anything. Because the truth is, guys, the stock market is the greatest revealer for what we need healed internally. Because in real estate, there's nothing you can do. Right? You can't do it today. But I love the stock market because it makes me focus on my impulses. It makes men focus on their impulses, right? One bad decision can ruin your entire life. We all know that to be true. So it's beautiful as like, wait a minute, should I breathe here? Should I control myself? Should I like restrain myself a little bit and kind of like calm the freak down? Yeah, probably. So I think for that, man, it really is let your plan dictate what you do before you get into anything. Talk to your wife, say, hey, I'm buying Tesla and we're going to hold it for 3 years. And here's the 3 instances we're going to get out. 1, 2, and 3. It doubles, it triples, and it quadruples. Here's how we're going to get out if it does these things. If it goes down, here's what we're going to do, and here's how long I'm willing to be wrong on Tesla, and here's the eventual price I'm willing to be wrong at. And you all know that you can insure stocks just like you can insure anything else. So you can buy insurance, so you have a limited risk before you even get into a trade. So you know mathematically exactly how much money you're going to lose before you get into a position. That's why it's not gambling. It is a math certainty. Here's how much money I'm going to lose if I'm wrong. And you can create that ahead of time. You buy that insurance contract. Let's go to Tesla. You buy Tesla at $250, which is not a bad idea, by the way. And if you buy Tesla at $250, you buy a 4-month insurance contract that costs $10 per 100 shares. So you spend $10. So that means your cost basis on Tesla, $250 plus 10 is $260. So now Tesla needs to go up above $260 for you to make money. Okay, cool. Well, Tesla was at $285 3 weeks ago. Probably shouldn't be that hard to eventually go above $260. But now you have your downside protected on Tesla, and you only have to spend $10 to do it. So it is, man. I've been very comfortable in my life selling a product at 30% return, taking that profit, putting it back into the exact same stock, selling the profit when it's at 100% return, and then actively trading it. And as I actively trade it, take 20 to 30% of those gains, continuously buy the stock after I have the profit in there, and leave it alone forever. That works pretty okay, honestly.
That's smart.
Yeah, because cash flow is king, guys. Like cash is cool, but cash flow is much better. And in the stock market, guys, let me tell you how big of the market is for a second. I know you know this, but $84 billion goes in and out of Tesla every single day. Tesla. One company on one market, on one asset, on one exchange. So I did the math one day. $4 trillion US dollars goes in and out of the stock market every day. 4 trillion. That's 4,000 billions.
Mm-hmm.
Every year is 14 quadrillion US dollars, which is assumed to be the amount of grains of sand on the earth. Like, it's a magnificently large number. That's the stock market, dude. And the bond market's 4 times bigger than the stock market. The Forex market is 4 times bigger than the bond market. Money is there. The money is there. We can go get as much as we want. It's okay. So there's other opportunities. That's what I'm saying on all this is like, sell your position, lock in a nice reward, make a nice profit for your family, go cash flow, take the cash, go buy something else, and just keep recycling it and let it keep growing.
So you also do capital raising. How does that tie into your overall philosophy on what you do?
My capital raising was definitely accidental as well. The capital raising came in, Mark, from I had a lot of customers who, again, to be clear, I don't manage people's money. I'm just a coach / consultant. I tell myself I'm the Tony Robbins of the stock market. I'm happy. I'm motivational. I tell people, hey, you can do this. You can do this if you want to. And here's some evidences why. Enjoy. But a lot of people started making some good money, man. And they made money in their IRAs. They made money in their 401ks. And they made money in their cash accounts. And they're like, dude, I just made 16 grand. Or, hey, I just made 32,000. Or, hey, I just made 100,000. Like, what should I do now? And I have always believed that you should take money from the ethereal and put it into something physical at some point. For me, it's been businesses, a little bit of real estate, other companies, things of that nature. The very first money raise I ever did was on a private island resort during COVID. When COVID happened, I went out and raised millions of dollars for a non-operational, let's hope this works, 5-star, 36,000 square foot, 14 room private resort in the BVI's.
Wow.
So I was like, if I can do that, I think I can raise money on anything, because I realize that people trust me, and they should. I'm a man of high integrity. Honestly and humbly as I can say that, I am not here to take people's money inadvertently. I do not want to rip anyone off. I am truly here to pour into someone's life in a positive way. So therefore, people have earned my trust. I've been here for 15 years. I have the highest stock market education customer service rating on earth, right? 4.997. There's 5 people that don't like me because I laugh too loudly and too often. So it's cool. I have a very, very high rating customer service because I care, man. So people trust me. We put in some money. That was the first one. And then when they started making their returns, they started telling more people, and it started snowballing. And I just studied as much as I possibly could and learned so much about the whole abbreviations, right? Funds of funds, GPs, LPs, KPs, all these things, right? IRRs. I didn't know any of that, but I started studying it like anyone else does. And now I have an okay grasp.
So how did that deal land in your lap, and what made you think, hey, this is a great opportunity when everybody else thought the world was falling apart? And, what was your outlook on when somebody was actually going to go rent one of those rooms?
You nailed the first part, right? Everyone was freaking out. So when everyone does something, I do the opposite. So I was like, how can I not freak out? The world's going to return at some point, because I'm not gonna throw out any conspiracy theories. It's not the show. It's not the time. I thought it was a cold, dude. I was like, whatever. People get the flu. People get sick. I think that's been around forever. I'm okay with it. Like, let's just keep the ball rolling with the world. I wasn't stressed out. So that piece of it definitely fell into place. And I know you boys both know this. Of my wealth, I can attribute 80% of it truly to being in the room, meeting the person. And I met a very, very influential, extremely powerful, and very well known real estate developer from being in the room and from paying US dollars to be in the room with her. And that's how the deal fell into my lap. She reached out to me in I don't know, fear, panic, opportunity, whatever, all three. And I was the only person that said, I got this. I can do this for you. And now we're best friends. We have an award-winning podcast together. We have tens of millions of dollars of business together that we do yearly. We have amazing, amazing nonprofits and NGOs and other organizations that we help and foundations and all the things, all from a huge capital investment just to be in the room with that particular person and conversate with them. Mm-hmm. And so that's how it happened, man. So I tell everyone, one of the best things you can ever buy, one of the best assets, it's not multifamily, it's not storage, it's not RV parks, it's a ticket into the room with the right person that you care the most about, that you really feel can impact you in a positive way, because you will get pulled. And I will shout out two people, Jesse Itzler and Colin O'Brady have been those two people for me. They changed my life in a huge way, because I bought a ticket to one of their events in 2019 called the Everesting 29029 event. And it was the hardest physical endurance challenge I've ever undertaken. I had to train on a Stairmaster for 16 hours consecutively, multiple days a week, to even be a part of the event. And I did end up finishing, and I finished, and I'm surrounded by the greatest athletes in the world. Colin O'Brady is a 15-time current world record holder. And he's there giving me a hug saying, hey, man, congratulations. Like, that was one of the hardest things you've ever done. And it just gave me a sense of accomplishment. But I had to pay to be there. But now I have his phone number, dude. Like, I text the guy. Like, it's amazing now the caliber of friendships that I have because I was there. So anyway, I know it's a long, long answer to your very short question, but buy ticket into the room, guys. It's the best asset ever.
So what ticket was that got you into the room with the developer? And like, what was your mindset? Like, what ticket were you looking for, I guess? Like, maybe talk about that.
Yep. I wrote a book in 2016 called Money Grows on Trees. Mm-hmm. And the ticket that I bought was her to be a speaker at my event. So she did technically come to my room, but I had to pay a relatively large figure for her to be there. Now, I did reach out to Garrett Gunderson, Killing Sacred Cows, and Grant Cardone, and David Goggins, and a few other people. And they threw out a number that it didn't make a lot of financial sense for the particular event. I would have lost money, and that's
never good. Yeah.
Don't do that if you can avoid it. That just doesn't seem right. So anyway, I didn't work with them, which is fine, no big deal. But that was a ticket. But you know what's interesting, man? That the room, as you mentioned, Mark, and kind of like with your question, it could be a virtual room. A lot of people who are listening to this or watching this, they could probably reach out. In fact, I know this to be true. You can hire 30 minutes with Mark Cuban for $10,000. I believe that's the figure. I mean, that's not that bad, right? Like, you get to ask one of the GOATs, who's also a fantastic trader. He's an incredible stock market enthusiast. He knows all about the markets. You know, that's not awful. The richest person on Shark Tank by a lot, by the way, is Mark Cuban. And anyway, I mean, I think that's fascinating. So for me, that was a ticket to the room, was literally paying her, giving her money to be a part of that event. Money Grows on Trees, a live event where I'm just there to shape people's mental beliefs about money so that they can really step into a life of prosperity and abundance. And yeah, man, it was one of the greatest decisions I've ever made.
Do you host an event every year, or what's your outlook on events? And do you switch it up, or what's your thought process?
I do, man. Every year I try to do something mentally spellbinding, something that no one else could think that they could accomplish in their life, and then I give it to them for a very reasonable price. An example, this past May, I rented a 180-foot mega yacht that has
I remember. Yeah, you
Yeah,
sent
it
me
has
the
a,
invite.
yeah, it has a Michelin star chef aboard, and we cruised around Croatia for a week, going to different ports on one of the most
Mhm.
stunning yachts that I've ever been on in my life. I mean, it's huge, it's immaculate, it's gorgeous, the food's amazing, everything's perfect. It's just, it's one of those things you look around, and you're like, me? Like, I'm a part of this? And it allows you to have a sense of deserving. It allows you to have a sense of, I've worked really, really hard, or smart, or a lot of time, or I've sacrificed whatever for my money. This allows me to realize that I'm worth it, that I'm okay to receive, and it's a very healing spot. So I always try to do something like that, where I just put people in a room, literally, that is earth shattering. It's one of those, like, one day before I die type of event, and I want to create that for people. Yeah.
So every year you're going to mix it up and do an event kind of like that, and then your goal is to what, bring like-minded entrepreneurs together, or do you think you might write another book and you'll do an event for a book, or you just whatever strikes your fancy at that particular year, but you're doing an event?
That's right, brother. Both. Yeah, both.
Okay.
I mean, the most recent event, I think you guys probably both know Tony Robbins. So I had his business manager on board. And wow, it's a very good contact to have, right? A guy who manages his affairs. Like, that's cool. So yeah, get a bunch of like-minded people together, get powerful people together, get people that want to change the world, that want to use money for good, right? To be a force for greatness, I think is probably one of the best things that we could do as a collective. Yeah.
So speaking of that, in terms of philanthropic causes, is there a common theme with where you give back in philanthropy?
It's a really good question, man. Right now, I am focused on a company called Airwell Recovery. They repurpose retired or almost retired special forces into humanitarian operators that go to war-torn disaster countries and just help the people there, help the company, the country, the people, the civilization, help the infrastructure recover. And it gives them a purpose, right? Because these are the most talented men in the world. My best friends in life could kill most men with a grape. And they're badasses, dude. American badasses. And it's really, really cool. So I spend a lot of time, energy, money, effort to help propel that organization. But it is, I don't think many people want to hand out. I think most, not everyone, but I think most people want to hand up. They want to work for something. They want to be given an opportunity, a chance. Let me show you what I can do. Those are the organizations I spend time with. I don't necessarily go, hey, I give you money and then you just take my money and give it to somebody else. It's like, if there's someone where, Kiva, have you guys ever heard of Kiva? Kiva.org?
Yeah, I'm a Kiva member. Mm-hmm.
Let's go, Matt. My guy. I love that, right? Great organization, because they pay me back whatever, 0% interest, 1%. I don't know what the interest rate is. It doesn't matter. But they I think it's just flat. They pay me back the interest. Like, I give them whatever, $500 loan, and they pay it back. But that loan, they're buying equipment, they're buying produce, and you know how it works, Matt. And I think it's just so fascinating. Those are the organizations that I like. I like providing capital, time, energy, resources, contact information to organizations that are helping individuals put a foothold and a foundation from which they can jump.
No, 100%. Yeah, I'm involved with the organization. I mean, where I found my passion in that was because a lot of people think that philanthropic causes are like, the puppy dog in a well type of stuff. But the organization that myself and Mark are involved with is Real Estate Investors Association, which happens to be a nonprofit organization. Not all RIAs across the country are nonprofits. And this one, I mean, Mark and I have seen what real estate has been able to do for our lives and our families and other people. So we're really looking at, because we took over this organization just this year, and we're looking to really expand its reach to help educate people on building generational wealth in real estate. So we can serve our passions with being evangelical about real estate, but also providing a platform for people that, don't have, dude, if you go to a family gathering, like, and you ask, you ask like, hey, who's bought a rental property? Like, nobody in my family has, ever bought a rental property besides my late father. Right. So yeah, I mean, that's like, some of the things that I really feel, strongly in supporting too.
Thank you. Thanks for doing that. And the reason I say thank you is because education, if we fix education, we fix this country. I believe that's 99% of the root causes of our problems. Healthcare solved by better education, right? Childhood ADD served by better education, like doing it the right way. Putting them in PE for 4 hours, please. Right? They don't have ADHD, bro. They're 7. They want to run all day, not sit down and listen to you. Like, come on. So let's change some things. Yeah, man. So I'm with you. Like education, the financial literacy, teaching people the thoughts of money, because money is a language. Like 500 years ago, if you didn't speak Latin, you couldn't read the Bible, and you had to go to the priests and to the pastors to learn the word of God. So you were being oppressed. Well, now that's not Latin. It's just financial literacy. KPs, LPs, GPs, syndications, right? RIAs, RIAs, custodial accounts, right? SEP IRAs. No one knows any of this stuff. It's like when we start to learn it and understand it and teach other people how this can happen, changes the game. Mm-hmm.
So what are your goals for this year? And then, I know what your future goals are, which I think are incredible. So if you want to share that, happy to plug whatever.
Thanks, man. Thank you.
Well, yeah.
Yeah. I mean, ultimately that's my vision, is to fix the educational system. And I have, since I was 6, 7, 8, 9, I have thought of no better way of service to this country than running and becoming the president of the United States of America. And I think that is a way, because I haven't seen since Kennedy. Kennedy was the last one. He was the youngest, and the person was like, I'm fixing the education system. And people were like, no, you're not. And that was unfortunate. But I think times have changed. I think more people like me, you, like us three, are like, no. It's the education system that needs to be fixed. Let's fix this, change everything, make our schools safe. Please fix that problem, and then everything shifts and everything changes. Within the next year to 2 years, the goal for me is to create a podcast called Solving America's Problems, where I get very smart individuals like yourself and just ask them very deep questions, right? Abortion, how do we fix this problem? School shootings, how do we fix this problem? Obesity epidemic in America, how do we solve this problem? And get the solutions to problems, because every problem has a solution. And a problem thought through and written down is half solved. So then number 3 is working with other countries and partnering with them in my financial model for education, because I currently have a product that not only teaches people how to use the internet for active income, but I give them the money to do it with.
Wow.
So it removes all excuses, right? They're like, how do I do this? I'm like, well, here's the education, it's free, and here's the money, enjoy. And I have parameters and risk and all that stuff figured out, algorithms and robots and all the things that protect me as well from a business standpoint. But like, why could I not get a government grant from Honduras, Ecuador, Texas? It's like, come on, man. The world's going to internet. Kids are making hundreds of thousands of dollars a year on YouTube and Twitch and streams and video games. Like, let's teach them to play the best video game in the world, the stock market, help make some money, and pour back into the economy.
That's beautiful.
Thanks, brother. So
when does that roll out?
Oh, that's now. It's happening. It's happening right now. So the next step for me is just to get in front of a big world leader or governor or senator that has some type of interest or some type of checkbook that has the capability of using the government's funding or citizen funding or whomever to go, let's create this propulsion. Let's make it happen. So it's coming, Mark.
Yeah. No, my son would be like all about that. He's constantly bugging me to like do this and do that. I want to buy this stock. I want to buy that stock. And, I'm teaching him about real estate and W-2 versus 1099. So he's getting all the lingo and stuff, but he's like eager to take the money he made on selling, lemonade and Gatorade and popcorn and put it to work. He's just not sure how to put it to work right now.
Send him my way, man. I'll teach him. I'll show him.
Yeah. That's good. He's in charge of me and my retirement. So
I love Love it.
Got to put them in good hands.
That's right. Well, thank you, gentlemen, so much for your time today. You guys are both remarkable.
Yeah, thanks so
you
much
as
for
well.
coming on.
Thanks for coming on, Jeremy.
Yeah, my pleasure, gentlemen. Appreciate your time. And Matt, reach out to me. Mark has my contact, but Mark, share it with Matt, and then let's just keep in contact, guys. Whatever I can do to help you as well, I'm all for it. I want great men to be great men together.
Listen, I'll drop it. I'll drop it right down in the comments so everybody can link to you on your LinkedIn.
Love you, big guy. Thank you.
All right, take care. Peace.
Yep.